Is this the market top and the start of the next leg lower, or are we about to bust through this overhead resistance and just shoot higher from here? It's a question I probably ask myself once a week, which is why we make these videos about once a week, just to update you on where the market is headed from here, because things do change. So in this video, we are once again going to do that market review, and stay tuned until the end because I've actually been developing this new strategy that I want to show you. So far, it's very promising, very exciting, and you can definitely use it too. But of course, if you want to learn our strategy that already works and already makes great profits, then just sign up for our free training. It's going to teach you how to invest exactly like our team does at Fallible and Macro Ops. There's a link in this video and down below in the description and comments. Just click that, sign up, watch the training. It's worth it. It's free. You're definitely going to learn things that are going to increase your profits in this crazy market. Now, as usual, we'll be going to Macro Ops, our global macro research and consulting firm, for the latest research. Let's see what this market is doing. And to start, we got a nice little quote from Hugh Henry, the famous fund manager. "I've resigned from the professional undertaking of coin flipping. I'm not here to tell you where gold's gonna be. I have no idea. That's my existentialism. I'm a student of uncertainty. I have no idea where the stock market's gonna be. So when I'm creating trades in my portfolio for my clients, I'm agnostic. I just want to enhance the probability that I make money come what may." And I like this quote because it answers a lot of the questions that I've been getting in the comments, like, AK, you're always calling for a market crash, or you say there's gonna be a second drop and there hasn't been one yet. You must be stupid or full of it or something. And my response is just like Hugh Henry here. I actually don't care which way the market is going to move. We publish this research for our clients, and I talk about it in these videos because we're just trying to gauge probabilities. We're trying to see, hey, what's the chance that the market goes higher from here, or what's the chance that it goes lower? And like I said, I don't care, because the only thing I care about is making money whichever way the trend is going. So even in this video, by the end, you'll see that we still think a second dip is coming, as well as most managers. They think the same thing. But if you take this training where I explain my strategy, you'll see that I've been long this entire time. I've been buying stocks and I profited really well off this recent bottom. And that's because it's one thing to be able to do the macro fundamental analysis of the economy and the stock market, but it's another thing to try and time it too. And normally when you try to put those things together, that's where all the mess happens, and that's where you end up losing money. It's just one of the hardest things to do, which is why so few are successful in the market. So I leave the timing and the actual execution to my strategy, which is already thought out, already planned, already automated. And then when I'm looking at the research, it's just to give me some information on where things could be headed from here, like what's possible. And then of course that research goes to our clients who, they're running all different types of funds, so they all have different strategies. Everyone uses it differently. But the most important thing, once again, is having your own strategy set. So you can look at all this research from all these different places, but then your strategy doesn't get influenced by that unless that's part of your strategy to change it based off certain factors that are happening. But it's all got to be planned out. And again, that's exactly what we go over in this training. So when I was saying that our team is bearish, well, so are most fund managers right now. So Bank of America's latest global fund manager survey came out last week, and I'm going to go through some of the highlights, but the summary is that there's a ton of bearishness, and the pain trade is up in credit and equities, which I'll explain. So just 10% of all the managers surveyed think that a V-shaped recovery is coming, which is pretty much what the market priced in here with this V recovery. So only 10% expect the economy to actually do that, and only 25% think this is a start of a new bull market. 75% expect it to be a U or a W-shaped recovery, where almost 70% think this is a bear market rally, which if you've watched our previous videos, we've been saying that this whole time, that this is just a bear market rally. And a bear market rally means that yes, you're getting this awesome price movement higher, but you're gonna get that second lower low. So the second drop that we always mention. Now, to be honest, the fact that 70% of managers think this is a bear market rally causes some concern for me, because it probably means that we're wrong. It's looking like our call for the second dip to come is becoming consensus, which is rarely a good thing. So because the consensus is that this is a bear market rally, the pain trade for stocks and credit is still up. And the pain trade is what I explained in the last video. It's the way the market could move to hurt the most amount of investors. So if all these managers are bearish the market and they're trying to short the S&P, then to hurt them, what's going to happen? The S&P is going to go up. And that's what's been happening this entire time. Like I mentioned before, retail are killing it, riding the thing higher, and then the professionals are trying to short it and getting blown out each time. It's the pain trade because it causes a lot of pain, obviously. So someone made a comment in the previous video asking why this is such a common phrase, that the stock market tries to hurt the most amount of people possible. So why is the pain trade, as we call it here, a thing? Well, I think part of it has to do with crowded positioning. So when I talk about a consensus trade, what it means is that everyone is on one side of the trade. So for example, if all the professionals are shorting the market, then all their money is over here. Everyone's piled on, say, one side of the ship. There's no one left to short anymore. All that's left is for people to cross the boat and start buying. So it's the pendulum of the markets that constantly swings back and forth. This is how it works. Everything gets so crowded on one side, like stocks get bought up so much that there's no more money left. Only thing left to do for all these people is to sell. And that's when it starts swinging the other way. And that's why you get the booms and busts. I always think about it like the pirate ship at the state fair, that crazy ride where you always feel like you're about to fall out, because that thing swings back and forth and gets higher and higher until it's almost going up and around. But it never does, because then you would all fall out and die, but it still makes you think that it's about to. And eventually it always swings back. It reminds me of the market, because you always think when you're up there like, oh, this is it, we're about to go all the way over, we're all gonna fall out. And you're barely strapped in with those bars. Never happens though, always goes the other way. It's all supply and demand. Someone has to be there buying for this person to be selling. So it tends to shift both ways and balance out at certain periods. So I still think that the biggest pain trade that could happen right now is that all these professionals get blown out and the market goes on this new bull run and all these retail guys make a bunch of money. Then the euphoria sets in and all these people start taking a second mortgage on their house just so they could throw it in the stock market. And as that happens, then once again, the positioning gets too crowded. Everyone's long. Everyone has their money in the market. And that's when the selling will start happening. And that's when all the retail people will get screwed. So you get the professionals getting screwed first and then the retail second. And that's everybody, right? Markets work best when everybody's crying. So this survey also said that the biggest tail risk for investors is that there's a second wave of this virus. But a vaccine breakthrough could be a V-recovery catalyst. But another thing is that I guess people think the Fed did a pretty good job because the credit event tail risk collapsed from 30% to 8%. So these managers aren't thinking that it's going to be another 2008 style, credit crisis with the banks and everything. So another interesting thing is that in this post-virus world, a lot of managers are thinking there's going to be a big structural shift. So 68% say supply chain reshoring, 44% say protectionism, and 42% say higher taxation. Now I am all for supply chains coming back to the US. Or it doesn't even have to be the US. Honestly, anywhere that the supply chains go that is away from China, then I'm happy with it. Because that's really the key. If the world just separates itself from China, that's what's going to crush them and crush the CCP. Because you guys know how much I dislike the CCP, and I think they're the biggest threat to us right now. And not just to us, but the whole world. You might have seen recently in the news that they just took away Hong Kong's freedom. Now there's reports that they're invading India right on that contested border line. And it's weird because I feel like the population in the US still doesn't care that much. They're not seeing China as the main threat. We just love to talk about Russian interference here. Sometimes I feel like it's just me and one of my good friends going back and forth on WhatsApp about how bad the CCP is and what they did today. And my friend is a Uyghur, by the way, and if you don't know who they are, those are the people that the CCP keep in their concentration camps and then they harvest them for organs. Because they're Muslim, just a casual Monday afternoon with the CCP. And if you stay till dinner, you'll see them release a global pandemic, all in a day's work. I'm disappointed in Trump though. Usually he's so good at talking trash and riling people up. I thought he would do what every leader has done in history when things aren't going well in their own country and point the finger at another country, in this case, China. Now what he did labeling the virus as the Chinese virus, I see where he was going with that, but that just makes things too racist. It doesn't have the right effect because the Chinese people are great. They're the victims of their government too. So you can't really call it a Chinese virus. What you should call it is CCPV. Just like, hey, you got HIV? Oh, you got HPV? Oh no, you got CCPV? Oh, that's the worst. That way it's very clear how people should feel about the CCP, the Chinese Communist Party. Trump needs to be a little more targeted in his branding. And just to be clear, I don't want war or something. No one wants that. That'd be horrible. But I think there are things that each country can do to put the CCP in their place and to pull away on all the ways that we support them, because China and the CCP, they can't stand alone. They're very tied into this global economy. It's up to our various countries to pull the plug. That way you could stop them from taking over the world and give their people a chance at actual freedom. Anyway, that's my obligatory CCP rant for this video. Let's move on. So the current trend that we're seeing in the stock market is definitely being helped along by the virus, everyone being in quarantine, stuck at home with stimulus checks, because a whole new generation of speculators are coming into the market for the first time. If you don't have sports and you can't go to the casino, well, the only thing that's running is the stock market. And nowadays it's so easy to get started. Open this account and we'll give you 3 free stocks. So like we explained, there's a lot of retail fueling this move higher. So Goldman Sachs recently pointed out that trades consisting of just one contract now account for 13% of total volume. And people that are just buying one contract, they're individual people, retail. And they're talking about options here, options contracts, which has been exploding. So not just stock, but people are jumping into options because the volatility is so much more fun. You get more of that casino vibe, So in some popular stocks like Chipotle and Google, small options trades account for nearly 1/3 of the total volume. So people are getting wild. And that's why I made that training, to hopefully give out some some good information when everyone's in this fever pitch. So if we look at the general market right now, it is running up right into this resistance at 3,000. You can see right here, as of today, it's just touching that line. And that's right where the 200-day moving average is as well. So if we look at the short-term path of least resistance, that remains upward, which means things are looking pretty bullish, because every short setup fails and every dip gets bought like crazy. So it's a sign that things are going to move higher. See, the selling pressure is right here in this channel between 3,000 and 3,100, but every single dip like here and here just keeps getting bought like crazy, and that's why we think it's going to keep going. But as I said, we're still looking for that second turn downward, and we're thinking it's going to happen in the next 1 to 2 weeks, but we need to wait for the market to actually show its hand, and change its tone. You got to follow price action with these things. And that actually reminds me of one more thing from this fund manager survey. It's that long US tech and growth stocks are super crowded, and a lot of people are thinking that value is done for and growth is going to be, the strategy that's going to win forever. Now, once again, if we go back to our pirate ship boat theory with the positioning, if everybody thinks tech is so great and all these growth stocks, then hey, it might be time for a correction. But at the same time, I've been hearing this for over a year now, saying, oh, everyone thinks growth is too good, so it's probably going to rotate. And that's the thing, all this positioning and sentiment, it's not always exactly the same as timing. So if you read a stat like that and thought, okay, growth is overcrowded, I'm going to get out, you would have missed out on so many gains, which is why when I look at it, I'm like, no, I'm going to play the trend. I'm going to get in all these tech stocks and I'm going to play it until it turns around. So it's like that saying goes, ride the trend until it bends. And the only way you're going to get out of a trend safely after you made a bunch of money is with the proper risk control in your strategy. So you got to be able to trust that strategy, and you got to be able to trust that it's accounting for something like that, because these trends can go on for a lot longer than people think. It's like the other saying, the market could stay irrational longer than you could stay solvent. So don't fight the trend, don't fight the Fed, but keep your risk control in place for when things potentially turn around. Alex, my partner at Macro Ops, who wrote this article, he also put a bullet here about Ray Dalio. And Dalio's been posting that series, The Changing World Order. And we did our first video on that, and I know I'm supposed to do another one because it's really interesting. Dalio and Bridgewater, they have the best data on the rise and fall of empires. There's a lot to learn. But as Alex and I were talking about, along with Tyler, there's something strange going on with Dalio. So Alex says here, one area where he completely disagrees with Dalio on, and he plans to write a post on that soon, which we will definitely cover, but he doesn't agree with Dalio's blind bullishness on China. Alex is in the very strong opinion that China will be a shell of its current self in 20 to 30 years time. Oh man, I love to hear that. But debt, history, and inherent regime fragility nearly ensure it. Again, the whole tyranny of the CCP does not actually work long term, though they made it work for a while now. But I've been reading Dalio's new posts, and he's just so pro-China that you start to wonder, like, what are you hiding there, Big Daddy Dalio? And our Fallible family was actually bringing this up in the comments of that last video. They were talking about like, hey, Dalio might be saying all this stuff about China because he does have a big fund there. And the more you read into it, right, and you're trying to see like, why is he so pro-China? It just seems like he's trying to play both sides. Like if he really believes that China is going to take over the world, which is what he says in these articles, then of course he wants to be in the good graces of the CCP, right? Because he has business over in China, which is just not a good look. I'm surprised there's no PR person telling him to just like shut up. It's great for you to publish all this data, but you don't have to publish your pro-CCP ideals, because if sentiment in this country does turn against the CCP, as it should, and world sentiment should turn that way too, as I've already thoroughly explained, the guys like Dalio sympathizing with what they get away with, they're not going to be looking too good. They're going to be in some crosshairs, especially when you're a billionaire. You're already known to run a cult, which isn't true, but that's one of the criticisms he always gets. But the last thing you want is a communist cult, and I'm already getting sick of Dalio. Instead of Big Daddy Dalio, in my mind, he's becoming little commie Dalio, just a CCP whipping boy. I don't know, it's not very American in my opinion, but I'm interested to know what you guys think. Feel free to comment down below with your opinion on what Dalio's obsession with China is. He always seems to have some ulterior motives. But okay, I gotta tell you about this new strategy that I'm developing. And of course, if you want the strategy that already works, then check out this training, as I've already mentioned. Link in this video and down below in the description and comments. But this new strategy that I've been developing, it's been going well, but I didn't exactly have a name for it. But thankfully, Marcel here gave me the perfect name. He said in our last video that Peloton will fit nice in his Becky portfolio. The Becky strategy. It's genius. And if you didn't watch our last video, I was talking about one of the best ways to spot trends in the market. And the way to do that is by watching what white women between 20 and 40 years old are into. What are they doing on the weekend? What are they doing every day? What companies are they using? Because those are the companies that you're going to want to invest in, because that's probably the latest trend that's going to take off. It's the Becky strategy. And I know every white girl after watching that video was like, excuse me, AK? And I'm like, sure, you can be excused, but where exactly are you excusing yourself to? Because I would love to invest there. Jake here loved the strategy. He said, if you want a white woman to tell you what products she's into, just give her a White Claw. This is so true, and it's so easy to do for me because I always have some White Claws on me. I love those things, especially the mango flavor because, well, you know, I'm Indian and you know we love mangoes. But have you ever met anyone who doesn't love White Claws? Of course not. They're incredible. They started with white girls, but now everyone loves them because that's the thing. All of us, you, me, we're all just basic white girls on the inside. We just need the actual white girls with good taste to go out there and find new stuff to introduce us to. They are the best at finding the new trends. That's why this strategy is so effective. Speaking of us all being white girls, my white girl name would actually be Paisley. Actually, I could barely flip my hair with this hat. Here we go. Paisley. So cute. 50% pasty, 100% Paisley. That would be the name of my new Nickelodeon show, like Paisley 101. And one disclaimer I should have said when I introduced this strategy in the last video is don't go around following white women down the street trying to see what products they're into. It's not a good look. Well, unless you're a tall white man, because then it's acceptable. In fact, you'll probably end up married to whatever girl you're following. But if you are any shorter than 6 foot or any shades darker than Caucasian, then don't do it because you will definitely catch a case. And no one wants that. But I'll keep developing this strategy and I'll be sure to let you guys know. In the meantime, go and check out this current strategy that works real great, and make sure you subscribe to this channel to get more updates on whatever I'm talking about, whether it's how bad the CCP is or white women. Do that and I will see you in the next video. And remember, we are all Becky's on the inside. So stay fallible and I'll talk to you later.